How's it going, everybody? My name's Warner Fields with Fields of Profit, and today I'm joined by Chris, who is a successful e-commerce entrepreneur. We'll get into all that kind of stuff. Built and sold an 8-figure business, and now he helps run Tall Oak, which does bookkeeping, CFO services, all that kind of stuff. So he's actually here to answer those tax questions that I get all the time. So bringing on a little bit more qualified professional for you guys. Before we jump into all the kind of the nitty-gritty of that, you just want to kind of briefly introduce yourself. Why should the people listen to Chris Potter on the internet today?
Well, hopefully I can explain the reason why you should listen to me, I guess. So yeah, thanks for the intro there. Basically, the general idea of what my background looks like is I actually started selling on eBay back in 2005. And in 2000, I actually went full-time on Amazon. And I ran an Amazon business in pretty much any business model you can think of between online arbitrage, retail arbitrage, wholesale. I did a little bit of private label. I did drop shipping as well. So you pretty much name the business model, I've actually done it in some fashion. And the last iteration of my Amazon business actually ended in 2020. And at that point, last year, we did about 13 million sales that last year when we exited our Amazon business. And then when we exited that business, it was me and a partner, and he went his separate way, went my separate way. And I decided to invest into some tax offices. So I actually bought 47 tax offices in Virginia and North Carolina. And this year we actually started doing, I guess it would have been 2022, is in the middle of 2022 is when we started doing bookkeeping and taxes specifically for e-commerce businesses. So we basically took what my people are good at on the tax side, we took what I'm good at on the e-commerce side, and we kind of merged them together. And, we've been running ever since from there. So we handle pretty much bookkeeping, CFO, taxes, not just for e-commerce, but we also do it for, pretty much anyone. Like this year so far, we're right now in the middle of February, and we've already done nearly 5,600 tax returns this season. We did over 10,000 last year. So we're already probably about halfway to what we'll probably end up doing by the end of the year.
That's awesome. Yeah, I'm sure there's a ton of need for e-commerce specific, like lots of new entrepreneurs getting into it who just have no idea what to do with their taxes. And that's probably why you're watching this video, right? So I just had a personal curiosity too. You said you've done like all the Amazon businesses. What was your favorite like model of it, even if it wasn't the most profitable?
I don't know. I don't know if there's a favorite, because like for me, like my big thing is I just need to be challenged. I always need to I always need something new. And so like the area that I found that was actually the most rewarding for me personally was just the research. I really love the research and be able to figure things out and all that good stuff. So honestly, like just the sourcing in general and finding leads, finding sources. On the wholesale aspect, it was trying to get those accounts that no one else could get. So like, it's not necessarily the model, it's a matter of like the portion of the model that I always thought was good. And the research portion of it was always my favorite, but they're all somewhat similar. It's just just a different methodology. I mean, wholesale is a little bit different because you are going to a lot of like conferences and you're actually talking to people and all that stuff, which I enjoy that too. So I don't know. It's a difficult question because they're all different. And, some points I just got tired of one model and went to another. So
I think it tracks that the type of person who wants to be challenged goes from an 8-figure business to just buying 47 tax firms, right?
Yep.
Yeah. So, there's probably a bunch of guys watching this video who maybe it's their first business, definitely maybe the first e-commerce business. I get the question all the time, like, do I need an LLC? Do I need a corporation? As a new seller, what do they need to worry about there? Should they go and start an LLC immediately? What's kind of your thoughts there?
Certainly. So just to clarify, before we get into any specific questions, there are two things I need to talk about. One of them, I'm not an attorney. I'm also not a CPA. However, I know a ton about taxes and I have lots of CPAs on my staff. So anything I say in this, as far as some of these answers, they're not legal advice. They're mostly just business owner to business owner, and they're at my best of knowledge. And so I would definitely recommend, if you do have specific tax things that you have questions on, see a tax professional, whether it's me or someone else, to get the most appropriate answers. So I want to make sure I get the disclaimer right off the bat. But specifically, as far as your question, which is, how should we start out? This is more of a legal question than it is necessarily a tax question, because, realistically, when you start out, it's pretty much mostly the option is, should I do sole proprietor, or should I do an LLC, or should I do an S Corp? Those are usually the first three. Corporations, for pretty much 90% of people, is not going to make any sense. Realistically, the only time that really makes sense is if you're some sort of private label business and you're going to hold on to it for at least 5 years. And there's specific tax reasons why that makes sense, but I would say probably almost everyone watching that video probably does not fall into that category. So then it boils down to, am I a sole proprietor? Am I an LLC? Am I an S Corp? And S Corp is really best for businesses that have sold at least enough to make a profit of $50,000 or more in a year before it makes sense. And there's a lot of reasons why I say that, but just keep in mind, if you're just starting out, that's not where you should start. I've seen some people immediately open up their LLC, immediately go to S Corp, and that's not exactly the best option.
Ambitious, but
they probably watch a couple of TikTok videos and everyone talks about S Corps and they're like, you got to do it. But realistically, the break-even point to actually have a S Corp actually even make makes sense, is about $40,000 to $50,000 of profit. So if you're underneath that, you're going to pay more for your tax preparer to do your tax return, and you also have to pay for payroll and all this other stuff that kind of like costs you money. So you shouldn't do it until you're about that number. So now the question is do you do sole proprietor or you do LLC? And realistically, in my opinion, you should start out with an LLC, mostly because of the liability aspect of it. It has nothing to do with taxes, because for tax purposes, it literally makes no difference between whether you're a sole proprietor or you're an LLC. They both function exactly the same. So it has to do with liability. And I think that way, if you ever were to get sued or if you ever that sort of thing, that way at least they're not coming after you personally. And so that's kind of really the big difference there. But the number one key that you should really think about, especially starting out, isn't necessarily the entity, but as far as the business split, because the biggest problem we tend to see with most people first starting out is they have their personal credit cards and then they have their personal bank account and they hook everything up, and then they just decide to do everything on their personal cards, everything in their bank account, and they put some business purchases on the card, they put personal ones on the card, and it's an absolute nightmare for tax purposes, an absolute nightmare for bookkeeping purposes.
That's what I did year one. I learned my lesson on that one.
It's a mess, man. It is an absolute mess. And we have clients that come to us with nightmares like that, and we untangle them, and it's not fun. It costs a lot of money to do it because it just takes a lot of labor for us to figure that stuff out. And so that's kind of like the biggest thing I typically see with most people is that when you create an LLC, it's almost like kind of has like a thought in the back of your mind that you're really starting a real business, which then forces you to open up a new bank account for business and then also kind of separate out your credit cards. And it is okay to run an Amazon business off of a personal credit card. The key is just to separate them out. So that way, if you have, let's say, 3 credit cards, you have one just for your personal stuff, and then you use the other 2 for business, and don't like put personal ones on those cards you're saying are business, and vice versa. That way, you're kind of keeping it fully separated.
Yeah, that's awesome. Lots of value there. And also within like the LLC thing, I agree. Like a lot of people say you don't need it, but yeah, it protects the assets. And also depending on the state, it's usually really cheap. Like some states are expensive, but I think I paid like $50, did it online. And I like the mental aspect you're talking about there is, I run a legit business now. I got to kind of be on top of it, right? So, kind of moving on from that, for these newer sellers at kind of a very basic level, are there any, some spreadsheets or specific tools that you have seen clients come in and they're decently set up on the back end for their bookkeeping?
Yeah, so I would say that the majority of people just either using Inventory Lab or they're using nothing is what I would say. The majority of people that come to me, they're just starting out within the last year. That's typically what we see. And I would say that Inventory Lab is probably the better bet of anything that you have, because it does give you, again, it's not an accounting solution, but it's okay enough to be able to get taxes done. And the biggest thing is it does give you information you need to be able to make buying decisions. Because when you're first starting out, your real key isn't necessarily to just figure out how to do bookkeeping. Your goal is basically to make money and figure out how to actually do that. And so sourcing is kind of where that comes into play. And Inventory Lab at least gives you the data you need to tell you, yeah, you did a terrible job on this item or you did a great job, because it tells you that stuff. And spreadsheets, yes, you can do it that way. But as soon as you start scaling and buying any sort of volume, it's very difficult to kind of keep up with that in spreadsheets. So generally, I would say Inventory Lab is probably the best bet. But, let's say, for example, you're someone who does Inventory Lab, but you also never put in any of your expenses, which we see that a lot too. And so we actually do have an internal spreadsheet that we use, that we give to our clients, that basically is an expense spreadsheet where you can take your exports from your credit cards and your bank statements, copy and paste them in there, and then you can just basically go through the list and categorize them as you go along. And we have a spreadsheet for that, and I'll probably give you the link on that you can probably post on this if you want to do that.
That'd be awesome.
Yeah, so we have that. It doesn't track income, it doesn't tell your profit and losses, but it's a good way to keep track of your expenses that people generally totally forget about or miss in Inventory Lab. And so that's the reason why we came up with that solution, because we saw a lot of clients that came to us and they're just missing all sorts of expenses, and we have that broken down so that way we help solve that problem.
Yeah, that's awesome. Another thing I tried to implement like this year to help me was putting, separating personal and business a lot, of course, but also for us, I started putting like a lot of boxes and software and all that on one card, and then inventory on different cards. So it's even easier to kind of separate what you got going on there. Something that I've been suggesting to some people seems to be helping them. So you can try that out as well at home.
Yep.
All to keep your accountant happy when you got piles of paperwork, right?
Yep. To kind of piggyback on that, sorry for cutting you off a little bit there, but to piggyback on that, once you do get to a point where you actually do want to hire someone to do your books, that actually makes it significantly easier for us to understand, like, is an item an actual expense or is an inventory purchase? Because like I was actually just reviewing someone's books a few days ago where they had their accountant doing the work on it, and they had like certain expenses for a specific supplier. They had them all in inventory. And so I asked, and so I looked at it and I was like, okay, well, 80% of these purchases are on one credit card, but then there's like, there are 20% on a different credit card. So I asked the client and I was like, hey, is that how you set this up? And he's like, yeah, generally that's what he did. So that immediately told me that the previous bookkeeper they had didn't follow that. And then I I was able to go in there and properly make the right expenses, which does make a difference for tax purposes. So that's just kind of one of those things that does make it significantly easier. Even if you do hire someone to do your work, it makes that job a lot easier, because then we also don't have to ask you, hey, what is this? And then, maybe we put it in the wrong category because you didn't do it that way. So that's an actually great tip.
Yeah, that's awesome. Yeah, so moving forward a little bit, what are some of those, like the most common deductions that you'll see Amazon sellers take? I got a million different suggestions from people, but top of the line, what should people not forget about?
Yeah, so probably the biggest ones I would say people typically miss would be any prep center costs, obviously the big one. And one kind of side note on here is, if you are using Inventory Lab, please do not put your prep center costs in with the buy costs. I've seen some people do that. Please don't do it, because it does mess up with your bookkeeping. If you ever do decide to move over to accurate bookkeeping, it totally messes it up. So prep center costs is a big one. Just those shipping supplies you mentioned there, that's a big one. Making sure you have every single subscription cost that you have, because that's a huge number that we typically see for most Amazon sellers, as there's all this software out there. Another one would be any sort of like lead list that you paid for, any sort of Discord groups, any sort of coaching that you've done, any sort of courses you paid for. All of those are deductible, and those are things that people typically miss as well. So that's kind of like the main ones I would say. And one of the cool things is that spreadsheet I was mentioning, we actually have a list that kind of like tells you all different categories, and it has examples of things that most e-commerce sellers typically have in each of these categories. So we can pretty much just go right down that list and say, hey, is there any of these I'm kind of missing? And that way you kind of jog your memory and say, oh yeah, I remember I bought that. I should probably go back and find that expense and make sure I get it.
Yeah, that's awesome. We'll definitely have to put that down below so you guys can kind of check through that stuff. Yeah, so for the, maybe it's their first tax season, maybe they had one tax season last year. What documents are they going to need to pull together for this year's tax season from Amazon, from eBay, like all that kind of stuff?
Yeah, so part of it depends on who you're working with for accounting purposes, because generally a normal CPA that is not fluent with e-commerce, they will ask you to pull all these reports together and then hopefully do it right. Whereas someone who understands e-commerce, we can pull those reports for you and tell you exactly what they are. So generally, like with when you're working with us, we actually get like an Amazon login, we pull the reports from there and all that good stuff. But let's say, for example, you choose to just find your local CPA. Generally, the things they'll usually ask you for, which they probably won't ask you for, but things they for sure will ask you, is if you sold over $20,000 in any of the different marketplaces. And keep in mind that is a change that used to be $20,000, and they supposedly changed it to $600. And then on December 23rd, the IRS decided to change it back and say $20,000 for this year.
That was, I don't know what they were thinking on that one, but
yeah. So for 2023, which is taxes you'll do next year, it will be $600. But for this specific tax year, it's $20,000 still. So any place that you sold $20,000 or more, you'll need to have the 1099s for that. Now, you also need to have all of your expenses that you paid, which includes any sort of expenses you have for the marketplaces. So like, for example, on Amazon, you can pull a date range report from Amazon that then tells you all of the expenses you have for Amazon. And then for eBay, you have to do like specific invoice exports from eBay. Then you have like Gumroad if you're like a person that sells lists. Gumroad has CSV files you have to export from there. And pretty much every platform you have, whether it's Mercari or StockX or Stadium is another one. There's all these different really smaller ones depending if you're clothing and shoes retailers. There's a lot of these other really small ones, and pretty much every single one of those typically takes some sort of cut before they send you the payment. And those are the numbers that you kind of need to know, because the biggest issue we typically see with people is that they think that the money that comes into their account is their revenue, but it's not.
It's missing the 30% from Amazon and all that good stuff.
Exactly. And so what happens is that 1099 that comes in doesn't even match that number. And so typically a CPA looks at that and they're like, I don't know what to do with this. And then they end up just writing it all off as an expense, which isn't the proper way to do it. So that's one of those cases where if you do work with a standard CPA that doesn't understand e-commerce, understand that they should be asking you for not just the 1099s, they should be asking you for all of those other specific expenses that are specific to each of those selling platforms. And generally they won't ask for that because they won't know to do it.
Yeah, gotcha. Yeah, so that's awesome. That's a lot of the stuff that I had questions for, that new seller who wants to jump in there, have a lot of tax questions. So just to summarize for that, that new seller, pulling together all their 1099s and all that kind of stuff from Amazon this year, making sure that they have, an inventory lab or like a seller board or something like that tracks their active cost of goods sold. Beyond that, is there anything else that you would kind of add to that? I'm starting an e-commerce business accounting starter pack that they should be well aware of.
No, I think we kind of covered it. I think the other key, like I said, the other key is that people typically don't track their expenses. So even just utilizing utilizing the spreadsheet that I kind of share would kind of solve that problem. So that's probably the biggest thing, but I think you pretty much covered pretty much everything.
Awesome. Yeah. Making sure everybody's got their bases covered there. So then for this second part of the video, then I asked a lot of you guys on Instagram through an Instagram story, do you have any tax questions? A very rare thing that I will never ask you again, probably, but this time we are actually answering some of those more specific tax questions for you. So I've got a little bit of a list here for us. So we can just go ahead and run through it. The first thing, this confused me back in 2018 with sales taxes and all that kind of stuff, right? As Amazon sellers, what do we need to worry about as far as sales tax? I get a lot of questions. Do I need to collect sales tax? All that kind of stuff.
Great question. And the answer today would be significantly different than it would be back in 2017, 2018, which you probably know. So I'm not going to go back through a history because I could sit here for 15 minutes talking about that, but let's just talk about what's important right now. So pretty much most marketplaces now actually do collect sales tax on your behalf. So for example, Amazon, eBay, pretty much they all collect them on your behalf. Shopify is slightly different because if you do have a Shopify store, unless you're specifically paying for their service to collect sales tax, they don't collect sales tax on your behalf. So if you're Shopify, that's a little bit different, but if you're just straight up just, marketplace seller and you're just selling on the major platforms, Amazon is collecting them on your behalf. Now, the major thing is that even though they are collecting on your behalf, when you actually create your LLC or you create your business, you're still required to have a sales tax license in whatever state generally you do. Now, keep in mind, every state is different. Obviously, there's some states that don't even have sales tax, and there are some states that have different rules as well. So this is a kind of a generalized rule, but there are certain states that this doesn't apply. So generally, you do need an actual sales tax license, which is basically filling out form with the actual state and opening up a sales tax account with the state. The issue is that as soon as you open it up, the state's expecting that you're going to collect sales tax, and they don't know otherwise. So what happens is that you open it up and you're like, okay, well, Amazon's collecting it, so I don't have to worry about this. Well, the issue is if you just literally ignore it, then what will happen is that the state will then say, oh my, you're supposed to be collecting sales tax. And they'll just basically guess how much they think you owe them. They'll send you a letter, and then you're going to look at it and be like, whoa, I don't owe $11,000. And so that was literally a story I had from a client that I talked to probably 4 days ago. Literally the exact same case is they got a letter in the mail, it's like $11,000, and they're like, what do I do? And it's like, you don't owe probably anything. But the thing is that what you do need to do is you do need to submit a form, typically whatever reporting method your specific state has, you do need to send something into them stating that, it's $0 you owe them. And then that's perfectly fine. But if you never send that form in, they will just assume you owe them money. And then it's a mess to clean up after the fact. So depending on your state, you need to figure it out. Like, for example, Virginia, which this is something I recently found out, is that you don't even need one in Virginia. You don't even have to open it at all in Virginia, but there's most states you do. And in some states you do it more monthly, some states you do it quarterly, some states you do it yearly. It's one of those cases where either you figure it out yourself on what that reporting method is, or you hire someone to do it. And that's something we do take care of for clients as well if we need to.
Yeah, with my Arkansas resale permit, I just go in, I type 0 every month. It's easy, but it takes me, 15 seconds, and you'll get an angry letter and all that kind of stuff. But yeah, reporting 0 is what we do there as well. So another pretty common question I got from the community is, can I hire, family, friends, my kids, and can I write them off?
The answer is probably it depends. And the reason why I would say it depends is it depends on the structure and how you're going to pay them. Now, like, for example, if it's your child, depending on the type of structure you have, you may have to put them on payroll, or you can just pay them. And as long as it's underneath a certain amount, you don't really have to claim it or do anything with it. You can claim it as an expense for you, and your child can not have to claim income at all. So that is a legitimate write-off, especially when you start getting into kids that are kind of like in the teenage years, because they legitimately can do work at that point, especially for the style of business that most people are doing this with. There's obviously edge cases where, like, if you're a private label seller and you're selling kids products, you can have your kids do photography. So those are cases where you potentially can do that. But I would say majority of people who are probably just doing reselling, OA, that sort of thing, generally prep is about the only thing they can really help with, or maybe sourcing. And so in those cases, usually teenagers are mostly helping with that. And so as long as it's underneath $12,000 a year, you generally can do that. And then you claim it as an expense for you. And then for them, they don't have to claim it at all. But keep in mind, if you're an S Corp, you generally have to put them on payroll. It's a whole different thing. Obviously, if you're hiring your brothers, that sort of thing, you certainly can hire them. It's just a matter of how you pay them is really the question. They're all deductible. It's just a matter of how you pay them. If they're technically employees, and that's what you have to determine, there's a specific guidelines you have to follow for whether they're an employee or contractor. If they're an employee, then you have to literally put them on payroll just like a regular employee. If they're not an employee, then you have to determine they're a contractor. You can just send them payments, but then the thing to keep in mind is that now you have to send them a 1099 at the beginning of the year, which a lot of people don't realize that either. They're just paying them cash or paying them whatever, and then they're like, yeah, and then we figure out, okay, well, what happened there? And they're like, oh yeah, we just paid them cash, or we paid them whatever, well, you have to still report that, especially if you want it to be a deduction for yourself. You can't deduct it if you don't actually report it on 1099. Those 1099s are due on January 31st. So for example, if you're watching this video now and you actually paid someone you know and you never actually collected anything, as far as like any sort of paperwork that you hired them, their contract, you should have sent the 1099 in by January 31st. So that's the key thing that a lot of people forget.
So you're in trouble is what he's saying if you didn't send it in already. Sweet. That's awesome there. I'm a big fan of hiring, friends, family, that kind of thing. So that's something I've taken advantage of. It's baked in trust and all that kind of stuff. So I love it when I hear people like, hey, my kid, they make their money from prepping stuff for me. Like that's awesome. So I'm a little bit personally curious on this question I got. How should people do their accounting for buying discounted gift cards?
That's a fun question. So it's a nuanced answer because the way you should do it, which again, this is like the technical accounting terms, the way you should do it is when you buy that, it's considered an asset to your company is what it is. And then when you buy the inventory, you should be shifting it from that asset category into an inventory asset. And then when the item sells, it shifts from an inventory asset to actual cost of goods sold. That's pretty much the chain of how it should work. And then you should effectively treat your gift cards just like their inventory. And then there's also like a discount because obviously you're buying it with discount. So then you have to have an adjustment generally for the basis between how much you paid for it and how much you actually use it for. So that's the generalized terms of how theoretically you should do it. In reality, that's ridiculously complex and pretty much even we don't follow that method for most clients that we have because that requires you as a seller to then keep track of all of that stuff. You now have to keep track of like how much you bought it for. You have to keep track of how much you have in stock at any given time. And it's an absolute nightmare. And most sellers don't want to do that. So realistically, what the kind of other option is let's say you're using Inventory Lab, right? Which is probably a good chunk of the people that we have here. And so what you would do in those cases is you effectively would buy the items and you buy the gift cards on discount, whatever the number is. And when you put the buy costs into Inventory Lab, you're basically just taking whatever percentage off you have for those gift cards. Let's say you got a 20% discount and you're buying the items. Let's say you take a look at your total number on your receipt and it's $1,000 and you got a 20% discount on your gift card. So then for your buy cost, you would take whatever the numbers are and deduct 20% off of it. Now it's a little more nuanced where let's say you only had $1,000 of gift cards, but you bought $1,300 worth of stuff. So now you have to figure out, okay, well, I only paid $800 for this $1,000 gift card. And then you have to figure out what the exact percentage is because that means you paid $800 in gift card. Then you paid another $300 in cash, which means the total you actually pay was $1,100 off of the $1,300. So you calculate what the difference in percentages, and then you percentage that out by item, and then that's what the item you put in for buy cost. So that's kind of like the general way we typically recommend doing it for that. Now, if you're actually doing it for like bookkeeping purposes, let's say you have like QuickBooks, the other option is that you just put it as an inventory asset, and then at the end of the year, you basically do an inventory valuation of it where you add up all of your gift cards, what you have left, and then we back those out as inventory. So that's just kind of one of the things that we do for that sort of case. But for the layman's terms that are typically used in Inventory Lab, that kind of bulk of what I just talked about, how people typically should handle it.
Awesome. Yeah, that's a little bit convoluted for sure, but I was getting that question on some of you more advanced sellers out there taking advantage of that. So yeah, that's a good answer there. Yeah. So another kind of one of those gray area questions I'm sure you get a lot is what should people do about cash back?
I knew that question was coming. So I actually have an entire thread on this on Twitter because I do get asked this a lot. And this again is a gray area answer. And it really is dependent on which way you want to look at it. Because the technical definition is that cashback, theoretically, if you're doing it for business, is taxable. Now, rewards are specifically told by the IRS that they're not taxable. So now you talk about some gray area stuff where, well, what if I convert my cash back to a gift card? Is it a reward? Is it mileage? I don't know. And there's no specific guidelines out there for the IRS that tell you how to handle those situations. So it more or less is most open for interpretation because there's no case law to really go after to say what to do. So at that point, it's like, okay, well, it sounds like it is rewards. So then it would make sense to not have to claim them. Then you have another case where if you think about logically that, and again, I'm looking at this from a business owner's perspective and not the IRS perspective. As a business owner, you're getting the cash back, but there's no 1099s that never go anywhere. So theoretically, the IRS never knows you ever received it. So I can tell you that a good majority of business owners, even though legally it's very, very gray area, they never claim them. That's what the majority of sellers do. You are supposed to claim them because if you were to do like Google searches and look up like, is cashback taxable, you'll get a couple different answers. One answer will say, no, it's not. And the reason why they'll say that is because the expectation is that most people who are getting cash back is on personal purchases. And so if it is a personal purchase, it is absolutely not taxable. And so that's the problem, is that as soon as you convert it from personal to business, now at that point, it's basically a rebate against the product you're buying. And so because it's a rebate against what you're buying, that is technically taxable. Now, again, if if you're one of those people who are like, again, this is me talking as a business owner of what I've heard from people doing and not what I recommend, but I can tell you this is what people do, is they basically just deposit their account, act like it never happened, and then they never tell their accountant or their CPA that ever existed. And realistically, we're not going to ask for that as a CPA staff. We're also not going to audit that because it's not what we do. But if you actually do tell us we have cash back, we're obligated to then tell you you're required to take it. So you can read between the lines as far as like what the legal law is and how the gray areas and all that good stuff. And unfortunately, it's a very convoluted answer, but a lot of it depends, because the issue is that, let's say, for example, you're like, hey, I have all this cash back, I don't want to claim it, but you tell me you now have it. I'm required to then say we have it, because if I don't, I potentially can lose my ability to file tax returns if I ever get audited on that. So that's part of the problem, is that if you tell me it's there, I have no option but to tell you that's taxable, unless you're one of those accountants that don't understand it, or one of those accountants who just doesn't care about their ability, and they think, okay, we're never going to audit on this anyways, there's no case law, who gives a crap. But you also don't want to be the first person that then creates the case law to make this happen either, because then you got a lawsuit to deal with. So you can read the answer any way you want there, but that's kind of like the long convoluted answer on that.
Yep. It's definitely a gray area, and that's the kind of reasons why I bring you on the show, right? Yeah. So that's some super awesome stuff. Really appreciate you sharing all that info with us. For, that seller out there, they want to go and start finding that accountant. Where should they start? What kind of advice do you have there?
All right. So I would say the key thing is to start asking questions with the person they're working with to make sure they understand what you're actually doing. And that's probably the biggest challenge we see with, there's a lot of people out there. They're amazing CPAs. They understand the tax laws extremely well. They're great bookkeepers. But as soon as you start talking about arbitrage, you start talking about gift card cash back, you start talking about, what do I do with, this cash back that came from here? What about Rakuten? How do I handle that? How do I handle cost of goods sold with items with Amazon that got damaged? Like, you start asking some of these questions, they're going to look at you like a deer in headlights and not have a clue what you're talking about. And if you go to a CPA and you ask them, okay, how many other clients do you have that have actually done Amazon sales? And if they tell you, well, you're my first or second one, they're probably not going to understand how to handle it. If they, another question you can ask them is say, how would you handle sales that are from multiple marketplaces? How do you do that? And if they're like, I don't know, we'll just ask for 1099 is what they'll probably say. And if that's the only answer they give you and they're not asking for any more information, then they probably are also not very knowledgeable in the space. So realistically, it's just you asking the right questions as far as making sure they understand your business. You can even ask them, all right, well, I'm reselling things on Amazon and I use something called online arbitrage. Do you know what that means? And if they're like, no, is that legal? Then you should probably think twice about using them, because if they don't understand what you're doing, there's no way they can make sure that you're actually doing your taxes properly if you don't know that. So that's kind of the problem.
Cool. Yeah, really appreciate you hopping on the show and dropping a bunch of value for us. For any of the guys out there, maybe they've got, tax questions of their own, they need some help. Where can they go find you, learn more about you, learn more about Tall Oak?
Definitely. So there's two spaces. So you can check out our website, which is talloakadvisors.com. You see my little logo here. Just go to that website. You can actually schedule a strategy session with me if you want to have a chat. I'm kind of backlogged at the moment. So unfortunately, if you do want to chat specifically with me, it's going to be a little bit of a backlog at the moment. But if you want to chat, we can go that route. You can also send us an email through there, and I'm pretty responsive through there. The other spot is you can go on Twitter. Pretty active on Twitter. I'm Chris Potter 361 on there. And you can DM me and that sort of thing. I typically try and check DMs in between my various meetings and things like that. So if you want a relatively quicker response, you can go on there. And again, we can handle taxes. We can handle your bookkeeping. We can handle CFO. We're kind of closed off at the moment, but bookkeeping and taxes, we definitely can take care of for pretty much sellers of any size. Specifically for taxes, bookkeeping, usually we recommend sticking with Inventory Lab till you're about like $40,000-$50,000 a month in sales. And at that point, usually then it makes sense to potentially hire us for bookkeeping. But for taxes, we can, if you've only sold $500, we can help you out with that. It doesn't matter.
Yeah, for sure. We'll get the links for that stuff down in the description down below. Really appreciate you all hopping on and sharing some value with the community. If you guys got value from this video, feel free to share some of that value back. Hit the subscribe button. That would really help me out. If you guys have any questions, comments, anything like that, drop those in the comment section as well. But I really appreciate you guys watching this video, and I will see you next time.